Ladies and gentlemen, good day and welcome to the Q2 FY22 earnings conference call of Gufic Biosciences Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Ami Shah, Company Secretary, Gufic Biosciences Limited. Thank you, and over to you, Ms. Shah.
Thank you so much. Good evening, everyone. I am Ms. Ami Shah, Company Secretary of Gufic Biosciences Limited. Welcome you all to Q2 Financial Year 2021-22 earning conference call of our company. I have with me Mr. Pranav Choksi, Chief Executive Officer and Whole-Time Director, Mr. Devkinandan Roongta, Chief Financial Officer, and Mr. Avik Das from Investor Relations team to give the highlights of the business performance of the company and to clarify the queries of the investors during the call. We'll begin the call with opening remarks from Mr. Avik, followed by Q&A session. Before proceeding, I would like to draw your attention that some statements which may be made by the dignitaries of Gufic in today's call describing the company's objectives, projections, expectations or any other events which might be forward-looking statements and are dependent on various factors must be viewed in conjunction with the risk and uncertainties involved in our business. The company assumes no responsibility to publish, update, amend, modify or revise any forward-looking statement based on any subsequent developments, new information or future events except as required by the applicable laws. We seek your apology in advance in case if we are unable to address any of your queries to your fullest satisfaction. However, our attempt is to be fully transparent in our disclosure and to enable the investors to get a clear picture of the company. I'll now hand over the call to Mr. Avik for his opening remarks. Thank you all. Over to you, Mr. Avik.
Hi, good evening, everyone. Welcome to our earnings call for the second quarter. The second quarter sales are a true reflection of our unique end-to-end business model, diversified across domestic branded business, exports, CMO and APIs. Each of these business areas have a deep and well-defined product portfolio that targets a wide range of therapeutic categories. As a result, we find ourselves serving a large addressable market that includes therapeutic categories that are growing faster than the overall pharma industry. As per September 21 IMS data, Gufic's representative market is growing at 36% year-on-year and 14% on 3-year CAGR basis. Our domestic marketing business has rebounded to pre-COVID levels, which is in line with industry trends. We have leveraged the existing brand equity of our portfolio to drive growth and focused on new launches to add to the top line. Some of our brands within Criticare, Ferticare and mass marketing segments have witnessed better traction than pre-COVID levels as well. The rebound in sales is a testimony to our varied product offerings within the therapeutic categories, excellent supply chain management and strong focus on medico marketing. On the exports front, the 171 product registrations in 25 countries has resulted in sequential increase in export revenues. This is driven by new product registrations and increased market penetration of our existing portfolio, especially in developed markets such as Germany, Portugal, and several other emerging markets. In the current financial year, we have successfully renewed 50 of these product registrations. Each of these products and each of these markets have a growing and addressable market, and going ahead, we foresee this growth to not only continue as we receive new registrations, but also as we unlock the value of existing registrations. With demand for COVID-related drugs receding in Q2, we utilized our capacities to service the pending order book in the CMO business. As a result, the product portfolio within the CMO business has also rebalanced itself to pre-COVID levels. We foresee strong growth in this area with launch of new molecules in high growth therapeutic segments, coupled with NDDS and best amongst fair unit economics, given our large manufacturing base of lyo injectables. The API R&D projects are in line with the planned timelines. We expect significant growth in the domestic and international markets as these projects begin commercializations. This will open up an altogether new opportunity for us, not only in the domestic but also the export market. The capex in Indore is also progressing as per timelines. We have acquired the land, the drawings and detailed engineering are complete, and we finalized the orders for all key equipments. In Indore project, the Indore project will be a game changer for us as it will slate us as one of the largest manufacturers of lyophilized injections in the world. Later in the call, Mr. Pranav Choksi will speak more about the vision and plan for the Indore facility. So as you can infer from the current performance and the underlying drivers of the performance, that we are not a one product, one therapy or one market company. Ours is a very well-balanced business model that benefits by leveraging the well-diversified product portfolio across each of these high-growth business verticals. Our performance in the second quarter surely is going to be the way ahead for us. The quarter had very negligible contribution of COVID drugs, and with this, we proved that we are not only a serious player in the domestic market and in the injectable space, but now with approvals coming in from regulated markets like Brazil, Canada, South Africa, and other countries, we are very, very sure to capture market share in these markets given our economies of scale and flawless quality track record. So with that, I'll pass on the call to our CFO to speak more about the financial performance of the company. Thank you.
Thank you, Avi. Good evening, everybody. I'm Mr. D.B. Rungta, the CFO of the company. I'm just highlighting the financial performance for the half year and quarter ended September 2021. First, I would like to highlight the financial performance for the half year ended 30th September 2021. The financial performance for the current 6 months compared to last 6 months was not comparable because during the last year, because of the COVID 2019, the whole country was under lockdown for the period in the month of April and May, and also part lockdown was continued till September 2020. If you see the sales for last year, the sales was 189 crores. The current year sales has been improved from 189 crores to 445 crores. There is a total growth of 135%. EBITDA, profit before interest, depreciation and tax. Last year it was 36 crores. This year it was 83 crores. There is jump of 132%. EBITDA margin has remained at the same level of 19%. Last year also EBITDA margin was 19%. This year also EBITDA margin was 19%. Profit before tax, that is operating profit. Last year it was 20 crore. This year it was 72 crore. There is a jump of 256%. Operating margin has been improved from 11% to 16%. Net profit after tax, last year it was 15 crore 90 lakhs. This year it was 54 crore 54 lakhs. There is total increase of 243%. Net profit margin is also improved from 8% to 12%. And good news is that the cash generation from operation has been gone up from 19 crore from April to September 2020 to 110 crore during the current 6 months. Now I'm highlighting the financial highlights for the Q2 compared to last year Q2. The top line has been last year was 129 crore. This year it has been improved to 194 crore. There is a jump of around 51%. EBITDA profit has increased from 31.67 crore to 36.13 crore. There is jump of around 14%. Profit before tax has been improved from 23 crores to 31 crores. There is a jump of 32%. Profit after tax has been improved from 17 crores to 23.34 crores. There is a jump of 35%. And net profit margin remained at almost the same level, that is 13%. Last year, this year it was 12%. Thank you. Now I'm requesting Mr. Pranav Choksi to take over.
Thank you, Rungta sir. Thank you, Avik, and thank you, Ami. So my discussion mostly will be in regards to some updates of the quarter and also the journey going forward. So we try on a quarterly basis through this call to give you an update about what our future projects are and what our current growth I would say vectors are. And then we also update you whether if there are any new products or pipeline, or in other words any infrastructural addition which has been done. So keeping that in mind, I would first, the normal way I would take it forward is to divide the Gufic's business into 4 strategic business units, which comprises of domestic business, contract manufacturing is the second one, bulk drug, and the fourth one is of course international business. Of course, revenue-wise, they might be in a different operation. Currently, what we foresee and what we target, that we see that the domestic business should always continue to be around 40 to 45% of our revenue going forward. The international business right now, even though being less, should eventually on a matured manner in the next 2 to 3 years come to around a 30% revenue. 20% of our revenue will be still controlled by contract manufacturing, being one of the most, I would say, keeping in mind a diverse product portfolio. We also realize that we might not be able to, I would say, commercially launch all of them. So that's why we always look at good partners and good distribution partners or good marketing partners, not only in India but abroad, which can take care of our R&D prowess as well as the infrastructural in terms of manufacturing. So contract manufacturing is one of the important pillars which will continue to rise, and we foresee 20% of the revenue still will be governed via contract manufacturing. And of course, 10% of our revenues will be of bulk drug, because till now, as I have mentioned in the last few quarters, our API, which has been a part of a legacy business, was mostly in regard to some antifungals and anesthetics. But in the last 2 years, not only capacity increased, but we also have focused on a strong R&D pipeline, which 50% will be part of our in-house consumption, and I foresee down the line 50% of the API capability will also be used for outward sale. So there are certain cardiac, diabetic, and also, I would say, hormonal, as well as certain biological products which we would be focusing on the API front, and they strongly would become 10%. Overall, since there would be a growth happening in all of them, we foresee that this is the ratio by which the revenue would be governed in the future. Starting with the domestic business, as I think well put up by Avik, we saw a good traction in the first quarter because of the immunosin alpha and a ulinafric and a doxycycline, and that's why you have seen that number just jump to 250 crores. A major jump was because of the COVID drugs, along with the black fungus drug, liposomal amphotericin B. And I was also very categorically very clear that the uptrend of that revenue was around 20 to 25%. However, and at the same time, we had some backlog of infertility, or I would say a little bit of a lull in the infertility business, as well as other, I would say, Asterderm business, which has come back in the second quarter. And of course, in the third quarter, in spite of Diwali, we have seen a good traction happening. So the domestic business on its own is continuing to stride forward, and we have come back to our normal trend with the launch of Stellar and with the launch of Asterderm, and of course with the launch of 3 new molecules also in the healthcare, Spark and critical care, I would say, divisions. We foresee the domestic business to always outgrow the industry growth rate, especially being where we have a very small base and a low base, so that will continue to grow. We also are now launching the botulinum toxin in the critical care space, so that also will provide some traction going forward, apart from the antifungals and the antibiotics which are lined up for Q2 2023 and Q4 2023. So that goes ahead. I foresee that the domestic market, we are going to enter into one more therapeutic segment, which is again close to our infertility business. It's more specifically to gynac and women's healthcare, which is complemented by Spark. That should also start kicking in. I think we already have mentioned in our presentation that we have launched for the first time in India a very unique folic acid analog, which is QF3, which is a quadrifolate, and that is something where the therapy is used by a pregnant lady or by, I would say in other therapeutic applications by a woman or by a male for more than 6 to 8 months. So that product with a unique combination, QF3, should have a good traction coming up in the future. Our PFS business also, with the launch of enoxaparin, even though being a generic product in the in the fight against critical care, that is something which is doing quite well. And I think in a very short time in ORG, we have come in the top 10. So that is something also in a testimonial to our marketing progress. Coming to the contract manufacturing business, like I said, we already are in the process of expanding our capacity in the month of December to Jan in our Navsari, I would say, infrastructure itself, where we are going to add up, we're going to start manufacturing our own penims, and we're going to come up with a new drug delivery system line, which should start kicking in from April 2023. So along with that, we also have forayed into Madhya Pradesh, where in Indore we have, like as Avik updated, we have started the construction of our state-of-the-art R&D center. And along with that, we also have started the construction of our additional lyophilized line, where the total capacity, what we foresee, would be around 40 million, I would say 40 million per year again. Along with the lyophilized facility, we also have entered into, I would say liquid vial and pre-filled syringe product lines, which makes the entire offering of our injectable on a much more broader way. Currently, if you see, the Navsari factory has a very clear-cut demarcation. It is mostly focused on the Indian business, the emerging markets, and of course the European markets along with Brazil, Canada, and Russia. But we saw the traction happening since the last 1.5 years. Even without COVID, we did not have these countries still contributing to us. So we foresee in the next 1 year to 1.5 year, we will be running out of capacity in Navsari, and that is where the Indore plant will play a role. Also, Indore plant is specifically made with a mind to take care of certain CMO opportunities for markets apart from what we are present in. To make it more clear, right now, I think we have approved by almost all countries except US and Japan. So with the Indore project coming in, we hopefully foresee ourselves as a CMO provider for countries like US also in the future. We are very clear that there are certain markets where we were very clear going to be a CMO partner, and then certain markets where we are going to have our own forward, I would say, sort of a distribution channel or a marketing channel. And that is where the Indore project, along with R&D setup there and complemented well by our Navsari infrastructure, I think we will be a force to reckon in the next 3 to 4 years in the field of injectables overall. The plant in Indore also will be complemented by one more block, which will be started in the month of January. The construction of that block will be started in the month of January 2023, which will be an additional product line in the terms of injectable, that is penims, which will also be, like I said, for all countries mentioned before. So what we foresee as Gufic to become one of the one-stop shop avenue for all injectable requirement, from antifungals, let's say anti-infectives, to all the way from anesthetic to all the way from nutrition, and also down the line to certain infertility and life-saving products also. So we foresee a product line to happen with botulinum toxin unit also up and coming. So we are looking at 2024, where another separate block will be added in Indore. And then, of course, there are certain other recombinant products and biologicals which are working on. So there will be separate blocks which will come eventually in year 2, year 3 in Indore, where we have enough, I would say, land bank to take care of our requirement for the next 5 years, along with the API infrastructure investment which is required. So that is where the role of Indore will be playing an important role, not only in the contract manufacturing, specifically much more in the international business, and also will well complement and help us get some capacities, diverted to Indore, so we can use our existing capacity in Navsari for domestic as well as, to take care of the current growth which is happening in Europe and I would say emerging markets also. Coming to our, before I come to bulk drug, I would like to focus on international business also. International business, as we have already been saying, is growing at much faster pace. Apart from just getting registration, it is important to also renew those registrations as well as also make commercial sense of these registrations. Otherwise, it's just we just keep on paying money and get them without any revenue, the registration makes no sense. So we have actually been successful not only in getting 50 of them done because they were due for renewal, and successfully all the registrations which we have got, almost 85 to 88% of those registrations have directly added into commercial, I would say, traction. So I foresee that more now markets like Brazil, which we just got, we already have announced from a registration a couple of months ago. We're looking at some more in the next 3 months. Along with that, Canada and Russia, South Africa, and of course, Southeast Asian, some countries which become part of the emerging markets. And of course, Colombia, which is another market which is doing quite well. We foresee that the export market will continue its trend of doubling up year over year. And eventually, like I said, eventually in the next 3 to 4 years, we should foresee 30% of our revenues being purely on international market. Coming to the bulk drug business, we have invested in the infrastructure, in the R&D, in the product pipeline, not only trying to safeguard our interest internally, where we are not dependent on any imports from specifically, risky or, I would say, geopolitical issues. So with bulk drug, I would say R&D and the infrastructure which we already have invested in the last 2 years, and if need be, in the next 3 years, we have the option of Indore to set up more blocks. I think a 10% revenue, 10% of our revenue for bulk drugs with some new products coming in, especially in the cardiac diabetic, which I'm very excited about, should be a good time going forward for us. I think before I come to the question and answer round, a lot of people were asking me about whether it's just a COVID impact or non-COVID impact. But I think with this quarter, we have clearly shown that, all companies have the COVID bump, which comes in April to June, but we have strengths beyond just those products, and we have, I would say, a well-balanced portfolio as well as geography as well as basket to take us forward. So if any questions are there specifically to anything of what we have just said, or of course anything new, we are much more open to take care of your query as transparently as possible. So I hand over the session back to, I believe, Ami, and then we can start with the Q&A. Thank you.
Thank you so much, Pranay sir. Market, we can start the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kushal Shah from Motilal Oswal Financial Services. Please go ahead.
Hello, sir. Sir, I wanted to ask about India coverage with our MR strength being just 1,000.
Sorry to interrupt you, Mr. Shah. Your audio is not very clear. May I request you to speak on the handset mode? I think you are on speaker.
Better now?
Slightly better. Please go ahead.
Sir, I wanted to ask on the MR strength. With our MR strength just being above 1,000, how much of the Indian domestic market would we be covering, and what is the potential over there? Would we need to increase it substantially? And region-wise, if you can specifically tell about how the coverage is and where we can improve.
Sure. So I think, is this Mr. Kushal Shah?
Yes, sir.
Yeah, hi. So Pranav here. So just to answer specifically, we have actually 8 divisions, which are part of, I would say, 4 major divisions. But so specifically, since we are into more of, a little bit of a specific and, therapies which are more related to the Class A and Class B towns in almost 6 out of the 8 divisions. Most of our field force is very specialized, where we look for a very high PMPM. We have total 2 mass marketing divisions, which are, of course, the healthcare and the Spark, where we have around 240 people, and we have another division, we have 140 people. So there enough scope is there, because they are mostly restricted to, I would say, 3 quarters of the country, not the 4 quarters. and there also they are restricted to class A, B towns also. So going forward, as you rightly said, for those mass marketing, the the possibility of expansion is much more, and hence we are looking at eventually reaching to the numbers of 300, 350. However, our mindset is very different as of now, rather than to have, so you rightly said in the Indian market, there are people who have 18,000, 20,000, 8,000, all that, where we have overall, I would say 850 field force as of now. That also includes, I would say 900 people, including managers also. And that is something we have been very particular about from day one, because we foresee that if we incentivize and pay our existing people well, we can always get a better PMPM, which makes sense much more because of the product line which we need. We need a lot of medico science in most of the products which we launch, and hence we are able to give it to people who are really paid well, who can actually and we have a special category or degree required for which is an internal requirement for going forward. So answer specifically, a critical care, infertility is mostly taken care of on a all India level. Our Stellar division, which is a newly launched division last year, which was mostly related to ortho and gynec, we have just opened up in 4 states. Our Asterderm is right now restricted to 8 cities, where we have 33 people. And we have, like I said, healthcare and Spark, which is related to mostly 3/4 of the country. Infertility and critical care has 2 divisions of their own, by which it's there's a parent division and also a offshoot, which is almost on all India level. So there's enough scope for us to expand in these divisions also, but provided the right PCPM comes. So I hope I answered your question well.
Sir, but if we are expanding to other geographies as well in the export market, don't you think, for our scale, we are expanding the management bandwidth too much, and then it would create issues like, whether how we are doing it domestically and how we are doing for the export market?
Okay, so to answer that specifically, so we have a very different guide. So, there is a separate president with 3 vice presidents and a separate team of, GMs, NSMs, and marketing managers, which handle purely the Indian business along with Nepal. And then we have a separate set of directors and, CEOs, along with a separate field management system, which takes care of international markets, where we also have then, a plan. Already we have around 2 national managers who take care of the country. So we have a very clear-cut segregation. So it's not that the management bandwidth is affected in any way, because like you see any, I would say, organic way of any company to grow, be it pharma or otherwise also, there are always, I would say, experts from the field which have been recruited, which take care of certain countries where the domain knowledge and the core competency complements that. So we don't see any challenge happening there, because this is a ever evolving and dynamic situation where we are always, of course, looking into add a lot of, I would say, unique manpower. You won't believe, in terms of the institution business also, we have really ramped up that in the last 8 to 12. We realized that there are a lot of opportunities in the government hospitals where we are not present in. Earlier we thought because of the margins being low, but now I think there's enough scope there, because a lot of ESIC opportunities, along with I would say a lot of unique and amazing hospitals which have come up, and where government is doing a great job. And that is where we have actually done and added experts from that field also, which are doing a good job. I think the entire institutional business has just become 5 times in the last 9 months itself, which also talks much about, if you have the right people taking care of it, I think nothing is impossible.
Sure, sir. Sir, just last one thing. If you can explain on the terms of, opportunity and where we stand as of now for the domestic market and how we can increase that. So like say, for example, we have 900 field force. Till what do we envision it to be in next 3 years, and what the potential of the revenue can be in some ways, like, whether it can be divisional or in totality, whichever you can.
So I'll just tell you a heads up, which we have said in the earlier past also. I'll not talk about the number of field force, where it will go, or revenue. I think Rungta maybe can throw more light over it. But currently what we have in mind is, we have enough scope. So like I think Avik mentioned in his talk, the entire represented market of Gufic in India is growing at 36% year over year and around 14% CAGR. If you follow Gufic's growth, it has been much faster than that. But what I'm trying to say that, we have been entering into these segments which always have the high growth potential, be it a derma, infertility. anti-infective, except for last year, has shown a good robust growth also this year. Apart from that, we have a product pipeline and economic of scale of infrastructure coming in, which will always help us to take care of the Indian market growth. So like I said, we will always be growing maybe faster than the Indian market because of the low base, but because of our inherent strengths also otherwise. Internationally, like I said, we always have, like I already mentioned, we have doubled up our international business in the last 2 to 3 years consecutively. So that is the way we feel that the revenue eventually should, come. I mean, it would be high, numbers there itself also, because we have just started the entire international operation. I'm saying in terms of matured market and, in terms of now the other regulated markets coming in. So the more growth factors would be mostly by adding new and new therapeutic segments, which we have. I already mentioned that we'll be adding up at least one therapeutic segment which complements our core competency, and we always have an anchor product for those. So we went into derma because of the botulinum toxin which we had. We went into orthogynac because of this QF3 which we had. We are going to go into, let's say, XYZ because of some unique proposition which we'll offer to the people of India, and that will be the anchor for us to go forward. So, like I said, but I'm sure Roonghta will address this, but like we already have been saying that, around 15% to 20% year-over-year growth is what we foresee, and we try to take care of that minimally. I'm saying in a pure market. I'm not, COVID situations of course are different, but in a pure organic way, we have enough plans to take care of 15-20% year-over-year growth, but of course better improvement of bottom line.
Thank you. I would request
product portfolio
to,
just one last one. Sure, I'll get back.
Thank you, sir. I would request participants to please limit your questions to 2 per participant, as there are several others waiting for their turn as well. If you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Chetan Phalke from Alpha Investco. Please go ahead.
Yeah. Thank you for the opportunity, and congrats, Pranav, for a great set of results. Sir, just correct me if I'm wrong. When we look at things in the overall context, it appears that our business is pretty thinly spreaded. I mean, we have too many divisions and too many products. I mean, Acidum, Herbal, Criticare, Stellar, Infertility, and so on. So, and also at the same time on the distribution side, we are focused on the corporate hospitals, government hospitals, where as per my understanding, there is pricing pressure every year, and we have to maintain the ground workforce as well, wherein the expenses are also bulking up. So in this context, the business model appears to be very challenging per se. And this reflects in our margins. I mean, despite peak demand, our margins are arrested at around, let's say, 17-18%. So what are your thoughts on this, and what will drive our margins towards, say, 25% as we scale up? Is that possible?
Yeah, so thank you, I think, for the question, and very well put. So if you see, we little bit differ in the business portfolio, because if you see the anchor products which we mostly go into always have that sort of, I think, some sort of a monopoly in terms of either a patent protection or they have some sort of a uniqueness in the time of launch. But like any product cycle, we always observe that especially in a critical care market or an infertility market, 3 years to 5 years is the time when it starts becoming a generic, and we lose that shine of the margins going forward. So having said that, we have a product pipeline. If you see, we have gone into this critical care business since 2015, and now it's 6 years. And we have still maintained the growth, and we have still maintained this appetite of launching a new product as well as a new product. I mean, either a new drug delivery system or a new product, which helps us to take care of the margin. Another important fact is that even though the pressure in critical care or these hospital-based products are mostly margins because of things, but we always are into I would say, economic of scale model. So our margins do not erode as much as what you would otherwise see. Maybe like, people always talk and compare us with the US, where, you have a innovator entering and then, generic companies come in and their margins really fall down. Of course, the wrong comparison which I'm doing right now, but just to put into perspective, for us, the erosion is not that much, because we always have an efficiency in production and efficiency in sourcing, which helps us to take it through, as well as our growth traction. And of course, not only our growth traction, but the Indian market is so beautiful that it offers us that organic push also in terms of the numbers going up in terms of revenue. So even though that even protects us going forward. Coming to the major thing, if you see a lot of our margins, which you see are being affected, is also because we don't see is a lot of investment goes behind in terms of every dossier, every R&D product, and also everything. So lots, and I'm not saying that with anything, but for the company of our size, the amount we spend on our research development and formulation development, or even in API synthesis, we spend a huge amount in terms of RMPM consumption. So the consumption which you see here, wherever we get a positive cash flow, we try to put it back in the system. Any new product, any new dossier which we focus on costs us around 2 to 3 crores for a normal unique product. And out of that, maybe around 70% cost is only for the RM and PM, where you have to take 3 validation batches, put them into stability for 6 months, and continue that till 2 years or 3 years, depending on their shelf life. And then, of course, those we cannot always commercially sell the entire thing, and that has to be written off. So at once, you can imagine that every quarter, we get around maybe at least 3 to 4 products in every division. Apart from the like you see that we have 8 divisions to market in, but apart from that also we develop a lot of unique products which we eventually use as a CMO model or out licensing model also. So that process will always continue. But if you see that improvement of margin is happening from 8 to 12% on what you call a PAT level, or maybe from an 18% solid happening on a PBT, or I think maybe Roonghta sir can, after this I will ask him also to add up to what I have said. But if you see how our EBITDA margins also have been increasing year over year, we foresee that eventually our investment in R&D will be arithmetically going on, but we see an exponential increase in our operational margins coming up, and that is where you will see this benefit coming in. I cannot answer your question about 25% being there or not, but with the exports coming in, we already are seeing a better margin coming in, and this will push us to our targeted margins going forward, which is of any standard pharma company. So I'm just trying to say that today, because of the amount of research and because of the amount of clinical data we are trying to produce, because of the dossiers which we are trying to produce, almost getting into all these countries and getting 4, 5 products per country every year, it's not a small thing. And even if you consider 2-3 crores for a basic product to make a maximum of 5 to 6 crores for a complex product like for any fungin or something, we're looking at a cool 30-40 crores just on basic dossier development, apart from R&D and I would say R&D and of course, those API synthetic stabilities. So this is where I feel, and with our product pipeline also moving into new drug delivery system, we will foresee a better margin coming for the new launches which we have launched up. So I think we should be okay. I think, Roonghta sir, can you add some light over it, whether if I have missed out anything or I must have, yeah.
Thank you, sir. First thing I would like to inform you that in case when we want to have a top line growth of more than 15-20%, then there will be always be pressure to launch a new product. Whenever the new project has been launched, there will be R&D expenses. So till we want to have a growth of more than 20%, the margin, which is EBITDA margin, presently is 19%. I foresee certain improvement. If you see the past history of the Gufic, the EBITDA margin was around 13-14%. Over the year, it has improved to 19%. Okay, I'm confident that it will going to touch to 21% in 2-3 years of time. But to reach to 25% is going to take a long time. Thank you. I think.
Yeah, got it. What is our Pranav? What could be our R&D expense run rate going forward? I mean, ballpark number. And what is the recurring registration expense that we incur every year?
So like I said, I would not like to comment on a quarter wise, because like I said, it all depends on a yearly. Yeah. So like I would say, right now, because of the extra cash flow coming in, we have just launched 2-3 important biological projects with Dr. Balram Singh, which should start kicking in. So we would be spending as of now, including RM, PM and other costs, would be around 10 to 11% of our revenue of last year on current year, and this year might be a little bit more because of certain plans which we have to accelerate certain products also in the market. Also, I'd like to just tell you that once the Indore factory comes also next year, you will see the same phenomenon. Whenever a new site comes, a new site transfer happens, always we will do these validation batches and the other things which will also start kicking in. But of course, by then we'll have much more better operational leverage to take us through and take care of those. So we always see opportunities where we can use up this material to forecast and get it more. So people normally say that how could you go from a 480 to a maybe I think we have finished 440 crores in the last 2 years. That is just because of the product basket which we had. So if we were not able to get the enoxaparin done or lipoampho done or the leuprolide depot done or maybe for that even the immunosine alpha done because of the R&D expense which we did in the last 2 years, I think, and even botulinum toxin where we have spent more than around just 22 crores on the botulinum toxin project itself, apart from the infrastructure expense, all that will start paying off, eventually in much more exponential way.
Okay. So the R&D expense includes the registration expenses as well.
That would be, so you can say R&D and registration expense altogether would be around 15 to 17%. I think Roonghta has the right understanding, but I think some of them are equal in gross margin and some are reflected in the other expenses, right?
Yeah. There are two types of expenses. One is the validation expenses for the consumption of RMPM. That is around 7 to 8%. Then there is the registration expenses, and all that expenses around 2 to 3%. So overall R&D expenses is around about 10% of our total revenue.
And the dossier expenses will be another, I think, 6-7%, sir, in terms of the
नहीं सर, वो सब 10-12% में आ जाएंगे. 12%.
Okay, sorry, my mistake. Then it will be around 10-12%, which comprises of everything. Yes.
Got it. This gives us the clear picture. If I can ask one more question on exports,
right?
Or should I come back in the queue?
I think let's let the moderator take the call. I'm not sure.
Yeah.
Can he or can he not? Yeah.
You may go ahead, sir.
Yeah. So on the export side, I mean, as we just mentioned in the opening commentary, we have some 170 odd registrations at present. So what is our game plan, let's say, for going towards, let's say, 500 registrations? Are we going with a one country, multiple products kind of an approach wherein our marketing cost comes down in that particular country? Or we are taking a product-wise approach that, okay, let's just take this one product and start exporting it to 25, 30 countries or something like that?
So it's very dynamic. If I tell you, maybe for a market like Myanmar or Thailand or Vietnam or Philippines, we would like to go for one country having multiple product registration where we can, like you rightly said, afford a field force going forward, and we can have our own medical team taking care of, medical marketing team taking care of them. And there's a market like, we have a patent of tigecycline where the product is going off patent in 2026, but we are still, aggressively pushing it to countries like South Africa, Russia, Canada, Brazil, and of course Europe, where these unique product will have its own takers because of the entrance in the IHS, and of course where there's only 1 or 2 players going in. So depending on the product potential and the different molecules, you'll see a much more regulated market is more market centric, where we don't have a front end as of now. We mostly use a distribution model where we're a distributor and a marketing, either we are the MA holder or the client is the MA holder, and they have a good basket which takes care of certain hospitals. There we use that single product versus market approach, whereas in certain markets where we know clearly that this is what we have, we try to register all of them, and then we have a separate field force which we can govern and take care of business, because the business internationally also, depending on the country, is either tender based or it's medicine, I would say marketing based. So depending on the country, we have a dynamic model in either of the cases.
Mm-hmm. Okay, so this should help us in growing our exports. I think if I'm not mistaken, in the opening commentary you said exports can go up by 100% YOY going forward.
Yeah. So that's what we have been doing in the last 2 years, and I foresee that should. I'm not sure that it will double up continuously, but yes, we can see high growth happening in the next few years also as our base becomes bigger and bigger. Yeah.
Mm-hmm. Okay. All right. That's it from my end, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Keshav Kumar from Raxan Investors. Please go ahead.
Hi. Good evening, sir. Thanks a lot for taking my question. Sir, are we looking at NC or NB development space for peptides and biologicals as well? Why I ask this is because last time you had mentioned about innovative NDDs playing a big factor in the peptide and biological space. And I can understand that we have strengths and track record in injectables and lyophilization. And recently, I came across that among dosage forms, sterile liquids are witnessing the strongest growth in CDMO outsourcing. So are we evaluating that space?
Yeah, Keshav, absolutely. So you see I'll answer your last part of the question first. If you see the way we have gone into the capacity expansion in the last 2 years, and also now we are doing with Indore going forward, we foresee that the sterile injectable space, especially in the regulated markets and upcoming markets, to see a good traction, by which the Indore and the Navsari factory will play a very important role. And yes, surely as a CMO, we foresee, like I said, still 20% of the revenues to come down the line also from the CMO business, or maybe that also has its own amplification model, and I'm sure we will be ready for that. Because right now we have just started opening up geographies, and the interest and the feedback which we are getting from geographies after getting 1-2 products done, I think you get more and more. So the economic scale, our sourcing potential and our sourcing efficiencies are really helping us to take care of the markets. Answering your second question about innovation in NCE, so I would like to say currently our focus is new drug delivery systems, where we use something which is possible in the form of a lyophilized product. We try to do it in a liquid or a PFS, or we do something which is not which is in the form of maybe injectable. We are trying to do it in a oral or a sublingual way, or maybe in the form of I would say a patch or a topical way. Or so the new drug delivery system is something which really excites us, and we are quite deep into it since the last 3 to 4 years. And that journey will be, that asset of ours will be used not only for our, I would say, anti-infective market, but also for pain, and it's also for cardiac and other issues also. Coming to an NCE, I think NCE would be in the form of some innovation which we come in a form of biologicals, like, we are talking about a new form of botulinum toxin, or we are talking about a new form of drug which is going to be used for a peptide. That's much more in that. But NDDS is something which is much more aggressive into, because NCE has its own, I would say, investment, has its own, I would say, clinical trial journey, which as of now, apart from biologicals or maybe vaccines down the line, we are not interested in. So biologicals, toxins and vaccines is something where we will try to focus on, get some new technology in, which is core to our DNA as a biotechnology company eventually. And that is where we foresee our growth coming in.
Sure, sir. My second question would be, we are foraying into rDNA, and I wanted to understand what is the significance in Gufic's scope of work. I mean, is it that we're looking...
Can you ask the question again? Are we foraying into rDNA as Gufic or as the world?
As Gufic's scope of work, I'm trying to understand the significance. I mean, is it that we're looking maybe 4 to 5 years hence and aim to get into more complex long chain molecules? Basically, touching back on what you said in the last call also, that you look for low hanging fruits when you foray into a fresh space. So right. Is it that initially we will build capabilities while working on smaller, simpler molecules, but directionally move into more complex ones?
Yeah. So yeah, right. So I think what I understand from your question, yes, I think we are definitely getting into, like I said, biologicals, toxins, and something to do with vaccines eventually is something which attracts us, which has, because of the core competency which we have clicked in with our association with Dr. Balram Singh in United States. So those are some things which we are really deeply getting into, and in terms of new, I would say, innovative, low-hanging fruits, what I was referring to was mostly, that you have like a depot injection, which is right now in the form of injectable, but you want something ready to use, and then you want a direct PFS system being set in. So those are those low-hanging fruits where we just come up with a new drug delivery system option, which makes the patient compliance very amplified. So you rightly said that those things are going side by side along with these high-end things, which will actually see the light of the day maybe in 4 to 5 years, because the entire regulatory cycle is so unique that we also try to do it in multiple countries for one of the molecules down the line, which will again get us better, I would say, traction.
Thanks a lot, sir, and all the best for the quarter.
Thank you.
Thank you. The next question is from the line of Gurudat Kamat, an individual investor. Please go ahead.
Hi, Pranabhai. Can you hear me?
Yes, sir. Loud and clear.
Thank you, and wonderful set of numbers, Pranabhai.
Right.
And having been associated with Gufic, I can see the good growth trajectory coming on a fast track also. A couple of questions, Pranabhai, in terms of the botulinum, the Botox botulinum toxin, right? I think, sorry, I'm not using the right word.
Right.
How is it in terms of short term? How is it coming up in terms of, say, monthly revenue, if at all you can divulge? If not, I mean, maybe you can talk in terms of percentage number. Second is, what do you see the potential maybe 2 years, 3 years down the line? Because it has lots of applications, right? I mean, as you're told, and you guys are also looking at. So that is the second one. And the third one is I just wanted to know about Penem. Penem, how is the whole landscape looking like? I mean, not much of information. Who are the competitors? What are the margin profiles? And what are your thoughts on, why are you looking at that particular area? And what is that overall thing looking like from, again, 2 to 3 years perspective? Pranav?
Sure, Mr. Kamath. Thank you. So answering your first question, the botulinum toxin will launch in February, and right now we'll only launch in the Aesthaderm division. And there we have seen the first 3 months it became 3 times and then 2 times, and now on an average we see 1.5 times the last month happening. But we are very, like I said, keeping in mind the entire international market. I was just talking to my sales team 2 days ago when we had the review of the last month. The international market of any product would always reflect in the Indian market. But botulinum toxin is one some unique thing where international market is being around 6.5 to 7 billion, and India we're looking only at 120 crores. So 6.5 US dollars versus an Indian market of 120 crores is a big difference. And what we foresee, and like I said always, for us getting the market, I would say getting the market built would be more important for us. And I foresee that, if you ask my appetite, I feel we have been going on okay in Aesthaderm with the launch of Zarbot. So our brand name right now is Stanox, which is launched in Aesthaderm, and now with Zarbot coming in from 1st January 2023, we will foray into the medical use also, where you rightly said there are a lot of applications which are opening up. So keeping these two in mind, I foresee that from a zero, we can maybe bring it to close to our size, where eventually this molecule itself has the potential to become an X percentage of the total Gufic revenue. Now I'm trying to control my words and numbers because I don't know how much I'm allowed to talk about it. But I foresee a big chunk of my revenues going forward. Maybe I'm surely in India, but of course definitely in the next 3 years when we enter the international market should be governed by botulinum toxin and also its new additions which will come in the next 2 to 3 years. So I think I'm quite excited, but it's not going to be an easy journey, especially in India, where we have to create and build the market, create more prescribers, teach people. I would not say teach it, but I would say medically, educate a lot of the users why to use it and why it's the drug of choice for certain indications where there's no other option available. We're going to set up training centers. We already are in the process of having advisory committees. We are going to get we already have a plan now because COVID has gone down. I think these were plans of last year, but now we'll be implementing it where we'll have experts coming in from Germany, from United States, and also from I think UK. And in the next, we are planning in the first quarter of calendar 2023. That is from Jan to March, and then from April to June. In the second quarter, where they will come and be creating training centers, and they will be presenting how this product can be used for certain indication where our Indian population might not be even aware about. So, and I think we have enough experts here in India also. I know for a fact so many doctors who have done so much amazing work in, I would say, botulinum toxin application also. The only problem what they have is that how do they educate the patient that there is a solution available here, and they can come and approach the doctor for the same. So that is the role which we want to play. We want the patients who have these conditions but they don't know where to go to be connected to these doctors, and that entire operation of ours, which will be, I'm sure, will be backbreaking, but there'll be a lot of rewards waiting for us down the line. So for the growth which we have seen at Aesthaderm, which is already a well-established thing and everyone knows about it, I'm sure once we get into the area where a lot of awareness and connections are required, I'm sure we will gallop much further. Answering your question on Penems, the reason we are getting into Penems is because it complements our current basket very well. We are currently already in Penems where we outsource the product, and now we have reached to such a critical, I would say, mass in terms of our revenue for India that we want to back end that up with our own production line, so we can be risk free of supplies, and we really have a back-to-back end connected. Also, when we take our products internationally, like I was just explaining to Mr. Keshavji earlier, that when we go to any other country and we want to market our products, they always ask for the entire spectrum, entire basket of the products coming in. And that is where we feel our anti-infective space will be incomplete if we cannot offer the penem markets, and the penem and the pip-tazo also coming in. So with this new unit coming at now by January, and then with, of course, the bigger unit coming in at Indore after 1.5 years, we foresee that we will be a serious manufacturing and strong partner for Penem also for many countries, for many good companies around the world, and especially for our own forward, for our front end marketing also, we will be a good support for us. Penem is interesting for us also because we also have some new drug delivery systems coming in, plus some new launches coming in for certain APIs which we are working on, which will be first time in India in terms of the combinations, along with the current Penems which are approved. So that's why it makes strategic sense for us to get into this and also be independent of any outsourcing.
Thanks, Pranav. Pranav, just the margin profile of this, these are higher margin products.
So what am I, Guruji, what am I earning right now? I'm sure when I make it in-house, I'll earn maybe 10% more, which will make my factory free in the next 2.5 years. So at least that is what is pushing me through. Yeah.
Okay. Then just a couple of things which is more around the COVID situation. Are we still supplying the black fungus product and the remdesivir product in the market? Is that still going on, or
so it has come down drastically from July itself. June end only it has come down. Black fungus was still there somewhat in July, but it's very I would say not very. It came and just went up first, and I think the government of India did a wonderful job where a lot of import was done. Of course, we played some role in June and somewhat in till mid of July in that space. But otherwise, I have seen that the control done by the government is quite good. We don't see so many cases happening up in terms of black fungus anymore. And of course, COVID, as you all know, I think from May end or not May end, I would say, but from June mid, I think it has gone down. So still, of course, there is some trickling in happening in, but it's very, I would say, negligible as compared to the overall space which we foresee. So might not be even 2 to 3%, or maybe I think this quarter might be even maybe 3 or 4% only.
Fair enough. Thanks a lot, Pranav, and all the best for future.
Thank you, sir.
Thanks for your answers.
Thank you.
Thank you. The next question is from the line of Deep Master from One Up Financial Consultants. Please go ahead.
Yeah, hi, Pranav and team, and congrats on a great set of numbers. I know you answered this question a bit on the margins, but I just wanted to, get some more clarity on the same.
Right.
It seems like, the hit on the gross margins also may have kind of limited your margin expansion this quarter.
Right.
So is that more a function of the mix of sales, or was there some impact on raw material which could sort of fade going forward and, kind of help in margin expansion over the next couple of quarters?
So yeah, first of all, thank you, Deep, for your questions. And yes, some impact has come because of the rates. I'm sure it will impact the third quarter much more than what we saw in the second quarter. But like I said, there are a lot of, I would say, development program validation which we have taken up because of, as soon as the remdesivir pressure went in the month of June and July, we started a lot of validation batches which were kept on hold for the other markets going forward. So almost you can imagine from once the first wave came and the second wave came, a lot of the capacities were blocked into these remdesivir and lipo-ampho. So as and when we got a opportunity, we got certain product baskets, 3 batches taken and validations done, and that's the reason that has impacted the gross margin, and the consumptions has already been done for these products going forward, and which, like I said, will automatically. So you see a quarter where suddenly we have pushed in the as many batches required for R&D and formulation development, as well as we have, like I said, the penems coming in the month of December. So in our, I would say, validation or a pilot plant, we already have taken a lot of batches of our penems also in this second quarter. So by the time, the launch time comes, maybe in April 2023, we have around 6 to 9 months data available, which will be required for submission to DCGI. The rates, just to go back to the API rates, we don't foresee, much hit to be there in the second quarter. But like I said, in the third quarter, they will be, there are some hits, but that has been also been taken care of by some price rise. So I would still say maybe 2 to 3% margin might be hit because of price. I mean, let's say 2% margin might be hit by that, which is still substantial and significant. But the majority of the hit is because of the other factors of R&D and those years and all that.
Understood. And that, as you said, is more a function of scale. So as you gain more scale in individual products and gain size, and I guess penetrate deeper into some of these markets, that should sort of begin to normalize as a percentage of your sales.
Yeah, absolutely, that's true. Because and that should happen up from, like I said, because till I think the normal progression of margins would go up as we have shown in the last 2 years. I think, like I said, till next year you will see this increase in happening 1 to 2% only. Once the Indore factor comes in, and the scale goes to a different level in terms of revenue also. So with the Indore coming in, along with the Navsari going to full-fledged, and of course our export market clicking in, we foresee that is where you will see the big, I would say, jump which we all are waiting for.
Correct. And then in the mix of business that's more focused on the injectables, would there be anything that would limit your margins to sort of mimic what other sort of larger companies would do in the injectables business? I mean, if I just some of the larger companies do high 20s or sometimes even low 30s in terms of EBITDA margins in the injectables business.
Absolutely, and that is where and
at least on your injectables.
Yeah, that is something which we clearly look into, like I said, because you rightly said, and that's the thing I think I was trying to bring the point up also when they asked me earlier, that injectable market is not as cost erosion due, or as I would say commodities as what people feel, because they just see that it's we are not an amicus. I'm sorry, I'm using the wrong. we're not an aminoglycoside, or we're not a normal generic player in terms of injectables. Otherwise we would be just another thing where the scalability will not go up. So like you said, eventually when you see us, and I think I don't know, I've been following a lot of good companies and also in the market who have evolved in the last 10 years. They have at least been 2, Gland being of course one of the biggest and best one. So I think the geography connection with the product basket which we offer is always pushing and propelling us towards that level of 20 to 30, which eventually I'm sure we will achieve.
Great, that's very heartening. Thanks and all the best.
Thank you.
Thank you. The next question is from the line of Dinesh Shah, an individual investor. Please go ahead.
Yeah, hi. Thank you for taking my questions. Pranav, I just wanted to know what is the current spare capacity in our plants? That is my first question. And second question is, when will be the commercialization of the plant 3 and plant 4?
Okay. So Dinesh, first of all, thank you for your question. I hope when you say individual person, I hope if you're looking for some extra capacity, you can directly contact us. We are more than happy to take care of your products. Just on a lighter side. But yeah, so answering your question specifically, yeah. So with the remdesivir and the lipo-ampho being a little bit down, we have almost around 20. I would not say 20, but I think 15-20% capacity going on. But what we foresee that with Brazil, Russia, Canada coming in, that might be affected. That's why we actually preponed some machinery to December, Jan, and I think in the month of January we were going to add another 500,000 vials per month capacity with the 2 new lyophilizers coming in Navsari itself. So first we thought that the Indore project, that is plant 3 and 4. Just to tell you, the Indore project is now known as alpha, beta, gamma, because alpha is the R&D, beta is the beta-lactam, and alpha is the lyo, beta is the beta-lactam penem plant, and gamma is the R&D block there. So they will be operational from around 2023 April. Worst come worst, we have of course more aggressive timelines internally, but I don't know what short lockdown and all that things might come up or might not come up. We foresee April 2023 for them to start kicking in terms of numbers. So we foresee this 5 lakh vial capacity from January should help us pull through till then. And we first thought that these 2 lyophilizers might not be required in Navsari, but because of this Indore project might take time, and we foresee these other markets coming in, I think we will be well placed till then with the new addition coming in Navsari in January.
Okay. Thank you, Pranav. All the best.
Thank you.
Thank you. The next question is from the line of Apurva Bandi, an individual investor. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. So as recently we have seen that like US drug from Amneal has acquired Puniska Health. So are there any plans for acquisitions like either domestically or internationally, like other than the capex which we are doing?
So you're asking me if we want to buy something out. That's what you're asking me?
Yes.
So I don't know. I think we are too small here. I think what you asked me for me to create something is always going to be much cheaper than buying something which is more ready because we have a core competency and knowledge inside. So I think I don't know much about the Amneal and Punishka deal, but I heard it's a good plant and they have spend a good amount of money and Amneal has a good front end there, so I'm sure it'll be a good fit. But what I just like to say that with the capacity which we are coming in Indore, which will be much bigger than what all these companies have, and I'm sure I'll be doing it at a much better price than I can have. I heard somewhere in the newspaper, again, I don't know if I'm allowed to quote this or not, but I heard somewhere it's for around 700 crores.
Yes.
Which I feel makes perfect sense for them, but for me, I cannot afford 700 crores because I know I can do it at a much better price than that. So for me, I don't mind waiting for a year and a half and creating something which will be much more efficient as per my control and as per my quality management systems, and I'm sure I'll be able to extract something about as per my potential much more. So I always believe, be it brands or be it infrastructure, we are much better off to make it on our own. Of course, till the opportunity comes, there's something which gives us immediate, gratification in terms of some new therapeutic segment or some new technology or something new. So even if you see botulinum toxin, it was very easy for me to go and in-license a product from Korea, China, or somewhere else. But why I went to US and made the entire product from scratch in India was that I knew that I would get much better margins. I would get much better gross money to spend and create a market. If I was just in-licensing or buying something out, I would have spent a lot of money and I would not have enough money to create that market in India. So when we do something from scratch, it always helps us to become more economically, I would say, viable in the long run. That's my opinion. I may be wrong. My thoughts might change once Rungta sir maybe teaches me about something. But I think as of now, I don't think acquisition is the way forward for us in the next year. But creating infrastructure is definitely the way forward for us in the next 2 to 3 years.
Okay, sir. Yeah. Thank you. So that's it from my side. Yeah.
All right.
Thank you. Ladies and gentlemen, to the time constraints, that was the last question for today. I now hand the conference over to Ms. Amisha for closing comments.
Thank you everyone for joining this call. I hope we have clarified all your queries. And in case there are any further queries that have remained unanswered today, you can reach out to us. The contact details are provided on the last slide of the presentation uploaded on the website of the stock exchange and also on the website of the company. Thank you so much. Please stay safe and take care.
Thank you. On behalf of Gufic Biosciences Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.